There we go. There's the volume. All right, so today is May 11th, 2024, and I got up. Today is Saturday. I got up this morning. I had a bright idea. I said, you know what? Gotta figure something out for the 5-minute time frame. So, if you were with me yesterday, you know that we looked and we made the labels for the charts, 5 minutes, 15 seconds. So we made these labels here, and you know, I was telling you, I said I've got some stuff for the 1-minute time frame. I've got some stuff for the 2-minute time frame. I don't have anything. I had some stuff for the 5-minute time frame, but a lot of it got misplaced and kind of scattering my my charts around. So I wanted to make a script for the 5-minute time frame. So that's what I did. All right, and essentially, here it is. Okay, so now I'm not giving it all to you, right? But I made it this morning, and essentially what we're looking for is so you see we're using the swing low bars. The swing low has to have at least 3 bars on either side of the swing low, and then we're looking for changes in both the volume and price level. So if we take a look at this area right here, I'll explain it to you. So this yellow line here is the 6-period moving average of the volume. This blue line is the 50-period moving average of the volume. When the yellow line starts slowing down more and more, and it crosses the blue line, so we get the 6 crossing under the 50, then we're going to go ahead and we're going to allow for the conditions to kind of start, right? So, and that actually happened, looks like it happened right here, where the 6 crossed under the 50. All right, so now if the 6 crosses under the 50, and we take into account there is a swing low, right? So the swing low that happened, we're going to keep a track of when a swing low happens, right? So the close, and you have at least 2, I'm not sure if it's 2 bars or 3 bars, but the most recent swing low with at least 2 bars on either side of it. If this bar then opens within this candle, if it opens within that candle, and it's a bullish candle moving in the upward direction, and the high crosses over the 9-period moving average, then we can use that as an entry, right? So we're going to take the close of that as an entry. So again, as the chart is, it's supposed to be kind of a reversal indicator. So as the chart comes down and the longer period moving average of volume starts crossing with the shorter period moving average, then we can start paying attention. And so we're also looking for the swing low, the most recent swing low. We want to see that price then moves out of that swing low. So here's the swing low, and price here has moved out of it and crossed the 9-period moving average. Now I have some criteria in there where we want to reset, these conditions, right? So if all of a sudden we get a huge bearish candle and its range is greater than the average range of candles, then we want to go ahead and stop the conditions and we'll kind of start over. So that's essentially the criteria that we have. And here is just the general equity curve that we did with this specific strategy, it's going back, I think I did it back 100 days or so. So I think from now, I'm going to run my strategies, instead of running back a year, or instead of only running back 10 days, I'm going to run it back, a quarter of the year, and then I'll kind of look at it. And this one, it did actually pretty well. So this is, now I can go here to studies, and I can go to strategies, click on that, click on this. I'm gonna run it 0.5, or actually I think I ran it by 1. Well, I'm gonna run it by 0.5. Rerun it here. Now, the one that you just saw there, it was the numbers that the walk forward optimization said we should use. But let's see. Let's see what just the standard optimization says. I think it'll take a couple minutes. How long is it going to take? 46 seconds? Okay, we can deal with that. All right, so while that's going, let's see, where are we at? Where's my other screen? Was it hanging out in the background? Okay, so while that's going, this is what the walk forward optimization said. So there were several of them. I did the cluster analysis. There were several of them that didn't pass. So let's go by testers. Here's the cluster analysis. All right, so there were several of them that didn't pass, right? But the way that I have the cluster analysis set up for pass fail, it cannot fail any one piece of the criteria, otherwise it would come up as fail. So that's why it looks, it's pretty sensitive. So if we look at the test results for each of those pass fails that you saw, we'll start at the top. Start at the top, and you see there's pass, pass, pass. There's only one that failed because walk forward run number 9 contributed more than 50% of the total net profit. All right, so I'll just kind of scroll down, and you can see all those passed. Only one failed, 2 failed, only 1 failed. 1 failed with a partial. So you see, for the most part, except for like that one, and then there's a few at the end, for the most part, there's a lot of passing going on. All right, so the one that did the best was this one. So 15%, so 10% out of sample with 15 runs. Okay, that is the one that is currently on. Let's see if I can move it here. Let's just say 30%, 15 runs. All right, so now when we go to P&L, performance summary, this is how that performance summary would have went on that specific run. And then this is how that graph would have looked, right? So over that amount of time with those input ranges. And the input range, if you go to sample, this is the 10% 15 runs. The best one out of this one as far as profitability, it's either between this one, 4,000 net profit or 4,000 net profit, but these have $1,000 in drawdown. This one only has $412 in drawdown. I wonder. All right. So, and the values here for the inputs would be 10 and 8.5. Right. If we did the values here for the inputs, it would be 8.25 and 5.5. Now, if we go back to the chart, you see here that strategy performance report. After we did that optimization we did just there, this is what that equity curve would look like. And the inputs that it's using is 8.5 and 5. And what do we get for the other one? It was saying I'll tell you, like this one here, I just ran. Remember the increments that we did were 0.5 increments. That's why this coming up 0.5. The increments that I ran over here was by 0.25. So we get a little bit more sensitivity over here than we get here. So that's the performance graph. Again, it doesn't look bad. I mean, nice move up here. We do have drawdown, and then we're kind of moving sideways, and then it's starting to go up again. So it's not a lot of drawdown, but you have to figure out what works for you. Okay, so what's the trade analysis, but the periodic returns, 73% gain, 73% profit, which that profitability factor is very important to me. Not only the profitability factor, but also just the profit factor, right? So the win rate, but also the risk to reward. 1.6. So 1 to 1.5 or so. Risk to reward is good. All right, and then what if it was on an annual basis? Annual rate of return would have been 129%, which I'm not excited about. I like to see that annual rate of return of over $1,000. Excuse me, over 1,000%. 500%, that kind of thing. It takes money to make money, though, right? It takes money to make money. But even if you made 100% of your return of your capital, and what did I run? I ran that back in a quarter, right? So, but this is over a quarter, and the annual rate of return would have been 129%. Let's see, how many days? What is the normal rate of return for the stock market? What is it? 3, 5, 7% annual rate of return over a number of years? Hang on. All right, so this isn't bad. This isn't bad. So this is one that I will put on my chart for the 5-minute time frame. So what I need to do now is, if I take it off of my chart, this is the strategy. I need to take that off my chart, and I need to add the indicator. Make sure the indicator is set up. I don't think I changed anything. Sometimes when you make the indicator and then you come back and you make the strategy, you change a few things along the way. I don't think I changed anything. So what I did here was it's indicated by a cross. So, and one of the things I've been telling you guys is that I'm moving kind of out of like the crosses and the dots and that kind of thing. I want to be a little bit more not necessarily expressive, but I want to know when I'm looking at the chart, like which indicator I'm looking at, so that I know what risk I should, if I'm taking this on a manually trading or on a prop firm account or something like that. I need to know if this is a scalp move or if this is a long-term play. So I need to kind of know. So what I'm going to do up here is I'm going to add a few more things to the chart, and then that way we can have, instead of a cross, we can have the words. So we're using system. I wish there was a way to make it so I had shortcut keys. I didn't have to write all this over and over, but I don't know of one right now. So we're going to do TL text label. TL no. Alright, and then at the beginning of the chart, we're going to do once. We're going to say that needs to be a new text label added to the chart. Okay, and so when this happens, instead of plotting at the low, we are going to do this. We're going to TL equals and then it's going to be a DM points 58 bar number plus max bars back minus 1, and then it's going to be the low of the bar, and then it will say I'm gonna call it mid reversal. And so when I'm thinking about like a larger reversal, I might be thinking about it's going to move the entire day, or it's going to move 40 points. But if it's like mid reversal, then we're thinking just we're looking for one leg out. All right, so mid reversal, close that. Then we need to just add that to the chart by drawing objects. Add TL. Now we got mid reversal. Oh, I need to lock that so it won't move on the chart. So it'll just be TL. Okay. So now I got mid reversal showing up here. And this doesn't show up that often, right? So this happened 57 times. Or if you look like at the chart, we got around 57 or so over the last quarter, right? So over 4 months, or excuse me, over 3 months, we got 60 or so. So maybe 20 a month. So maybe one per trading day on average, something like that. So there's one. Didn't get one the prior day. That one would not have been. I think. What happened on that one? Did it take it to the end of the day? No, that one got stopped out. So, and then that one took a profit. That one took a profit. So, yeah, that's what I was up to this morning, and so that one took a profit. Good. But one of the things I do want to do is here for the strategy, I actually have it such that it what did I do? I just verified something new, so I hope I didn't change anything. But I do need to change this so that instead of just having a blanket stop or take profit, I need to look, when I enter, I need to look at the range of the bar when I enter. Because some days your range is going to be, your average candles range is going to be 5 points, 5 minute time. Right? And then some days that 5 minute bar is going to be 10 points. Well, I shouldn't be applying this blanket 7-point stop, 14-point profit taken. I shouldn't assign that blanket to every single day. So it should be respective of what's going on that day. So I do need to change that. And once I change that, then maybe I'll come back and do a updated video. Hopefully the curve looks a little better and not a little worse. But it would be something like when you take an entry, it would be something like when you buy, you also need to capture the range of the day. So we would have something like, I'll call it range C, or range capture 0, and then I'll say range C is going to equal the average true range of 7 bars for that entry candle, and so it'll just hold that value once we buy, it'll hold that value. So then I'll take range C and see, this is the thing. I don't know if I should be multiplying it here. Range C, excuse me, range C times range C. I didn't put that in place because we want to take, so range C, I think I need to do it by big point value now. So we're gonna be, instead of here, we're looking at an amount times the average entry price to get our stop loss. We need to take range C and that's going to give us the current range when we enter. And so say we had, so we're looking for stop loss, let's go call stop loss X, and we want X to be equal to range C times Y. So let's try this. Let's just get this out of here. So technically we're going to be looking for range C. So stop loss and take profit are going to be variables that we will be looking for, but range C, okay, range C is not a variable. Range C, it's a variable, but at this point it's a constant because it's been assigned the value of the true range at our entry. So range C will not change at this point, but the variables here, stop loss, take profit, will. The question is, what range do they need to be in order for it to make sense? So say we came over here and we got in here, we look to the right side of the screen, we got in here at 50.60, and then we got out here at 50.68. That's 8 points. 8 points is what's that? 8 and 5, $400. $400 on ES. So 400. If we take the range, average true range, say the average true range in here would be around these bars from 63 to 57. We'll call that 6. So how do we get from 6 to 400? Oh, what's that math? 6 to 400. What's that? We'll call it 60. We'll call it roughly 60. So then these numbers here would need to be in that 60 range. So I believe I'm kind of doing this on the fly. So we'll start at 60 for our take profit, and then for our stop loss we'll start at 30, and then we'll verify that, and then we'll come back over here to the chart and we'll redo this. So we call that 30, we'll call this 60, and now we need to optimize it, so we'll go from 15 to 50, we'll go by ones, and then here we'll go from like 30, 40 to 80, see if we get a better curve. Uh-oh. Optimize values to insert this record. Really? I don't think so. Optimize. Like I say, I may have just messed up the whole thing, and we'll get worse results. But this is the process. This is the process. Like I said, I thought I had a pretty good strategy here at the beginning, and now you go and modify it a little bit. And if this doesn't work very well, then I'm going to leave it alone for the day, and then I'll come back and I'll make more sense of it. So, like I said, the best we were doing before is about 4,100 on net profit. So let's see what we get here. Still get 60, 6 times 25, 150, so maybe 15,000? No. Alright, so running it this way, survey says, look good. Oh, 1,500. Okay. All right, buddy. Took something good and you made it bad. Let's see what. Let's see where we went wrong. So 1,300. Profit totals. The drawdown, we'll be looking at a curve like this. To the worst. What we had initially was seemed to be the best. However, I'm still not sold. I still think that this is the way to go. Let's see. At the inputs that was used, and okay, so it does range widely in the 40s and in the 70s, 80s. Some of the times you can see, like if the majority of your net profits are all at the very top, if all of these numbers are at the top of the optimized range that you did, then most likely you didn't go high enough on your range. But all these are kind of scattered throughout, so I'm seeming to think that the range is okay. Alright, so range C was able to 207. Anyway, if we look at the chart, then if we look at the chart, it kind of did what it was supposed to do. $412 was a profit, so it was 417 and 418. So my entries don't look bad, but no, I mean, so got in there, stopped out there. Yep, that's kind of. Try average true range of 14. Well, initially that looks much worse. All right, so that looks much worse. It did end up taking profit here, but it waited to the end of the day and just got out at the last candle prior to close. So then I'm going to minus. And if this doesn't work, I'm just going to reset what it was, and then work on it later. But I actually consider that to be a bit of a win, the initial one that I had. But again, it wasn't. I don't think it was very responsive. And if the best that this one can do is $1.50 per average trade, then it's going to suck. Make 90 bucks. So that's way worse. Zoodoo-doo. Alright, so I'm just going to reset this back to what it was before. Let me see if I can get it back. And it happens this way sometimes, guys. Again, you keep messing with stuff, but there'll be a breakthrough, right? So there'll be a breakthrough. I'll figure something out that'll make a lot of sense and be a great script. But that change right there, that wasn't it. Okay, so I think it was back to 5.5 and 2.5 or something like that. I guess it's about time to wrap this up. It's getting loud. I would like to get my settings back to what they were. That's about what it was. Okay, but one other thing to look at, is this backwards? Yeah, this is garbage. This is garbage. The take profit is 5, and the stop loss is 9. So essentially, this is a negative risk to reward. You know, as far as your calculated risk to reward, it's a negative relationship. And I'm not trading it. I mean, the graph looks okay, but it's just gonna take a few bad trades for you to just wipe it out. So this morning, yes, I got some practice on scripting and just kind of coming up with ideas and making sure that they are that I can work through the logic of finding support resistance levels, swing lows, and incorporating the conditions, weaving them, and everything like that. So I'm telling you, that's helpful just to run through that. But today was not I did not find a profitable strategy. So I don't know if I want to leave it on the chart. I think I probably will just need to take this one off of my chart. Like I said, I mean, it gives you some decent entry, but if the back test and the optimization and if you run it back and it doesn't work, then what makes you think it's going to work in real life or in live trading? That one will be taken off. Good practice. All right, it's out of there, and I'm out of there. I'm Eric. I'm out.